Dan Ives, global head of tech research at Wedbush Securities, says artificial intelligence is about to drive a multi-year bull run led by NVIDIA and major cybersecurity firms. He calls this moment in the market the AI party, and according to him, it's still just getting started. In his words, the AI party started at 9 p.m., it's only 10:30. Investors are underestimating the AI revolution. In today's video, I'll show you the full clip of Dan Ives speaking on CNBC, and right after that, I'll break down exactly what he said and what it really means for investors like us. Then, I'll share my own in-depth analysis of the smartest AI stock to buy now based on the trends he's talking about. If you only watch one video today, make sure it's this one. And watch it all the way till the end, because this could change how you look at the AI market going forward. Hit that like button. Let's try to get 1,000 likes on this one. Share the video with someone who needs to see it, and drop your thoughts in the comments below. Don't forget to subscribe so you never miss the next big investing update. Alright, let's hear what Dan Ives had to say.
Alright, Jensen Huang comments. Is that just enough to turn everything around, to ease all these valuation concerns, the fact that he sees things getting stronger and stronger?
But it is. Look, we've talked about it. I mean, that was a white knuckle moment this past week. I mean, you could say it started off with Palantir, those ridiculous numbers and the stock selling off. 10-to-1 is still demand to supply for NVIDIA chips. We talk about it from Asia. I think everything Jensen's seeing, I think we go into late next week, that NVIDIA earnings, that's going to be sort of the Super Bowl here. I mean, I think this is going to be a tech market that I think rips higher. I think tech stocks are up 8 to 10% into year end, led by NVIDIA.
Led by
Palantir,
NVIDIA, which has to report
Microsoft.
Earnings. So obviously that's a factor. They have to have strong earnings, I would assume, for your thesis to hold. I want to get to valuations for a second, including one of your picks for us, a company that you actually raised the price target on, Zscaler. Mm-hmm. You have it at $350, about a 9% upside from where it trades right now. Its forward PE is 87 times. We're going to show Palantir too. More than 220 times. CrowdStrike's another one of your picks. More than 125 times forward times, or 125 forward earnings. These are really elevated valuations, Dan. I don't care what's going on with AI. Is it just not a concern to you personally?
Look, I mean, you've talked about it over the years. If you look just at 1 year valuation or 2 year valuation, you missed every transformational tech stock the last 20 years. It's my view in AI, a fourth industrial revolution, you look at the next 3-4 years, $3 to $4 trillion that's going to be spent. I mean, more money is going to be spent next 3-4 years than the last 10-12 years combined. So when I look at a name like Zscaler or names like CrowdStrike in terms of cybersecurity, you're not getting really what I view as even an AI multiple for what could be an incremental 30-40% revenue of the total company today over the coming years. That's my view in terms of how you have to look at it. And that's what we talk about Palantir. $1 trillion market cap next 2 to 3 years.
All right. I want to go to Zscaler very quickly because that's one of the companies like you're really focused on right now. Again, raising the price target. Zero trust player. So zero trust is a big thing right now, especially with AI. If you talk to anybody in cybersecurity, but they're facing a lot of competition, not only from Palo Alto that's beefed up with acquisitions, but also CrowdStrike that's made a number of acquisitions. Platforming, that's the big thing. Is their platform big enough to maintain their customer base as we see really, we use this word a lot, a bifurcation in cybersecurity from the bigger players to the more specific players? It seems like companies are gravitating towards the bigger players.
Look, it's not a zero-sum game. I mean, so I view, when I look at Zscaler, they're expanding their solution set at a pace that's really unrivaled. And I think when you think about the second, third, fourth derivatives of AI, cybersecurity is front and center. So if you look where they play, I think they're in the sweet spot. So to my point is that as you go into earnings in the next, call it 2, 3, 4 quarters, investors are underestimating what the Zscaler move looks like. But I'd say the same thing for Palo Alto, the same thing for CrowdStrike. I mean, those are 3 names on the Ives AI 30.
All right, this morning it's easy to be bullish. You're always bullish, but it's easy to be bullish on everything because everything's moving higher. Number of earnings coming out this week: Cisco, Applied Materials, Sony, CoreWeave. Is there one of those that has the potential to have the big market impact, upside or downside, like we saw from Palantir?
CoreWeave. I mean, put an asterisk around that. And I think you could also say it's Cisco in terms of some of the things that they're seeing in AI. Look, I think despite what we saw last week, it comes down to this is a bull market. I think it has 2 years left. Because in my view is that investors, they're underestimating the second, third, fourth derivatives. You look at CoreWeave, you look at Nebius, you look what I believe is actually now setting the scene. But it all starts, Godfather of AI, Jensen, NVIDIA, next week. That's going to be, I think, a seminal moment to move tech stocks higher.
All right, so just hypothetically, if CoreWeave isn't as good as expected, or if it's pretty good and it sells off, what does that mean for the rest of this week in tech, or at least until we get to those NVIDIA earnings?
Yeah, look at Meta. I mean, Meta sold off, and obviously the haters came out, bears came out of hibernation mode. But why? I mean, growth's they're expanding capex, and that's what you want to see. So I think sometimes the reactions to stocks, it sends a signal where you think something's wrong. But if you actually think about the thesis that's playing out in terms of this AI revolution, I think it continues to be bullish. Everything we've seen on CoreWeave, I think the infrastructure players are going to continue to be extremely bullish. And we've talked about it. In the AI party, it started at 9 p.m. It's now 10:30 p.m.
It's 10:30 now?
It's 10:30.
Okay.
And the party goes to 4 a.m.
Right off the bat, the conversation opens with talk about Jensen Huang, the CEO of NVIDIA. Dan Ives treats Jensen's recent comments as a major signal of strength, suggesting that NVIDIA's demand cycle is far from over. He calls the recent market action a white-knuckle moment, especially with how some AI stocks like Palantir saw huge volatility. But in his eyes, the core message is simple. Demand for NVIDIA chips continues to outstrip supply. That imbalance alone, he believes, is a massive driver of momentum going into NVIDIA's upcoming earnings. He even calls those earnings the Super Bowl for tech investors, meaning all eyes will be on NVIDIA as the company sets the tone for the rest of the sector. Then he makes a bold prediction. Dan thinks the overall tech market could rally 8 to 10% into the end of the year, led by NVIDIA and Palantir. He's betting that strong earnings from these AI heavyweights could push the entire market higher. But the interviewer challenges him, pointing out that some of the companies Dan is bullish on are trading at extremely high valuations. They go over the numbers. StocksGalore trading at 87 times forward earnings, Palantir over 200 times, and CrowdStrike around 125. These are massive multiples, the kind that usually make traditional investors nervous. The host basically asks him, Dan, how are you not concerned about this? These valuations are sky high. Dan's response is classic Ives. He argues that focusing on short-term valuations is the biggest mistake investors make when it comes to transformative technology. He says if you only looked at 1 year or 2 year valuations, you would have missed every single major tech revolution of the past 2 decades. To him, AI represents the fourth industrial revolution, and he predicts $3 to $4 trillion will be spent on artificial intelligence over the next 3 to 4 years. That's more money, he says, than the previous 10 to 12 years combined. So when he looks at companies like StocksGalore or CrowdStrike, both leaders in cybersecurity, he believes the market still hasn't priced in how big their AI-driven growth potential really is. He argues these companies could see revenue increase by 30 to 40% in the coming years as AI becomes more deeply embedded into their platforms. And then he drops another big statement. He predicts Palantir could become a $1 trillion company within the next 2 to 3 years. That's a bold call, even for Dan Ives. The conversation then shifts to StocksGalore specifically. The interviewer points out that StocksGalore operates in a highly competitive space. You've got Palo Alto Networks aggressively expanding through acquisitions, and CrowdStrike is doing the same. The key question is whether StocksGalore's platform is big and strong enough to hold on to its customer base as the cybersecurity industry becomes increasingly divided between giant platform players and smaller niche providers. Dan's response is confident. He insists it's not a zero-sum game. In other words, multiple winners can exist in this space. He believes StocksGalore is expanding its product lineup faster than anyone else, putting them in what he calls the sweet spot of cybersecurity as AI evolves. He sees cybersecurity as one of the most critical second and third derivatives of AI, meaning it's one of the industries that will benefit indirectly but enormously as artificial intelligence expands. He thinks investors are underestimating StocksGalore's upside in the coming quarters, and lumps it in with Palantir and CrowdStrike as part of what he calls the AI 30, a group of key stocks leading the AI revolution. Then the host points out something interesting. It's easy to sound bullish when everything is moving higher, especially with so many earnings reports coming out this week from major names like Cisco, Applied Materials, Sony, and CoreWeave. He asked Dan which of these companies might have the biggest potential to move the market, either up or down, similar to what Palantir did earlier. Dan immediately singles out CoreWeave, the fast-growing AI cloud infrastructure company that has been a huge partner to NVIDIA. He also mentioned Cisco as another one to watch because of its exposure to AI networking infrastructure. Despite last week's volatility, Dan doubles down again. He says this is still a bull market with at least 2 more years left to run. He believes investors are underestimating the long-term effects of AI's expansion and the multiple waves of growth it will unleash, from data centers to cloud infrastructure and cybersecurity. He calls Jensen Huang the godfather of AI, and says NVIDIA's next earnings will be a defining moment for the entire tech sector. The interviewer presses one more time, asking what happens if CoreWeave doesn't live up to expectations, or if it performs well but still sells off afterward. Dan doesn't flinch. He points to Meta as an example, saying when Meta sold off after earnings, the bears came out immediately. But in his view, that pullback was misplaced because Meta is increasing its capital expenditures to fuel future AI growth, which is exactly what long-term investors should want to see. He's basically saying short-term dips don't change the underlying bullish thesis. He calls the AI movement an ongoing revolution and insists the infrastructure players, companies like CoreWeave, NVIDIA, and others, are still in the early stages of an enormous multi-year boom. And then he closes with a metaphor that really sums up his outlook. He says the AI party started at 9 o'clock at night, it's now only 10:30, and the party goes until 4 in the morning. What he's saying is that the AI boom is still in its early hours. There's a long way to go before this story plays out. So in short, Dan Ives is telling investors not to get scared by short-term volatility or stretched valuations. He believes AI is a generational opportunity that will reshape technology spending, drive trillions in new investment, and create the next wave of mega-cap winners. For him, companies like NVIDIA, Palantir, Zscaler, and CrowdStrike are at the center of that storm. And while the market may wobble week to week, he's convinced the long-term trend is still strongly upward. That's the big takeaway from this interview. Dan Ives sees the AI revolution as not only intact, but just getting started. And if he's right, the coming quarters could deliver the kind of growth that defines the next decade of tech investing. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's talk about the smartest AI stock to buy now. A company that quietly shapes the world as we know it, Taiwan Semiconductor Manufacturing Consortium, or TSMC, ticker symbol TSM. The name might not grab headlines, but its impact is absolutely massive, touching nearly every aspect of modern life. TSMC is what's known as a foundry. It manufactures the chips that other companies dream up and design. Imagine it as the world's most advanced printing press, but instead of ink, it prints the brains of our electronics. Tech giants like Apple, NVIDIA, and AMD design the most brilliant cutting-edge chips, but they all rely on TSMC's expertise to actually bring those designs to life. Before TSMC, companies had to handle both design and manufacturing themselves, a process that was expensive, slow, and incredibly complex. TSMC flipped the script with a simple but revolutionary idea. You design, we manufacture. This changed everything. Suddenly, companies could focus on pushing the boundaries of design, while TSMC perfected the art and science of manufacturing at scale. Today, TSMC's client list reads like a who's who of the tech world. iPhones, NVIDIA GPUs, and countless other devices all depend on its unmatched manufacturing prowess. TSMC isn't just a supplier, it's the beating heart of the global semiconductor industry, connecting continents and powering innovation everywhere. Its unique position gives it a powerful advantage. TSMC benefits from the success of every client, no matter who comes out on top. Whether Apple sells millions more iPhones or NVIDIA dominates the AI revolution, TSMC is always in the winner's circle. Its reach extends far beyond consumer gadgets. TSMC chips power everything from smart homes to self-driving cars and industrial robots. Its business is spread across the entire tech landscape, making it resilient and essential to progress in every sector. TSMC is a bet on the relentless drive for faster, smarter, and more powerful devices, year after year. Its quiet, focused business model has made it one of the world's most important and influential companies, even if it rarely seeks the spotlight. The giant behind the curtain is pulling the most crucial levers in technology, shaping the future from behind the scenes. TSMC's true strength lies in enabling others to innovate, to dream bigger, and to build the next generation of technology. It's the backbone of the digital age, quietly supporting the devices and services we use every day. Its influence is everywhere, woven into the fabric of our daily lives, even if its name isn't on the box. In the world of technology, TSMC is the quiet giant everyone depends on, whether they realize it or not. That's the power of being the best at what everyone needs, an invisible force driving progress. And that's why TSMC matters, now more than ever, in a world built on silicon dreams. TSMC doesn't just lead the semiconductor foundry market, it dominates it, shaping the very foundation of the global tech industry. Its influence stretches far beyond the borders of Taiwan, quietly powering the devices and digital infrastructure we rely on every day. As of 2025, TSMC holds a staggering 70% global market share. Its closest rival, Samsung, has just 7%. No other company even comes close, making TSMC the undisputed heavyweight in chip manufacturing. In advanced chip manufacturing, TSMC's lead is even greater. It's a monopoly built on relentless innovation, not anti-competitive tactics. The company's commitment to research and development has set a pace that competitors struggle to match. Building a cutting-edge chip fab costs billions and takes years. TSMC has outspent and out-innovated everyone. Its massive investments have created a technological moat that's nearly impossible to cross. Its technological lead is measured in years, not months. Every generation of chips puts TSMC further ahead, widening the gap with each breakthrough. For companies like Apple and NVIDIA, TSMC's next-gen processes are a critical advantage. Their most advanced products simply wouldn't exist without TSMC's expertise and capacity. This creates a powerful feedback loop. The best designers go to TSMC, fueling its growth and keeping it ahead. The world's brightest minds want to work with the best, and TSMC's track record is unmatched. Competitors face enormous barriers, hundreds of billions in investment, and the challenge of winning over TSMC's loyal customers. The risk and cost of catching up are daunting, even for the world's largest corporations. Switching costs are huge. A single chip delay could derail a billion-dollar product launch. For many, the risk of moving away from TSMC is simply too great to consider. That's why, despite global tensions and calls for supply chain diversification, the world's top tech companies remain tied to TSMC. Their futures are inextricably linked to its success. They simply have no alternative. No other foundry can match TSMC's scale, reliability, or technological prowess. TSMC's dominance is a fortress, one that's nearly impossible to breach. Its position is protected by technology, talent, and trust. It's a monopoly hiding in plain sight, quietly shaping the future from behind the scenes. And it's the linchpin of modern technology, the silent engine powering our digital world. The AI revolution is all about computation, and TSMC is the gatekeeper. Every major AI chip, from NVIDIA's GPUs to Apple's processors, is manufactured by TSMC. Billions spent on AI data centers flow straight to TSMC, no matter which company leads in AI. TSMC profits from the entire AI boom, not just one winner. Its role extends beyond data centers. AI is moving into phones, cars, and everyday devices. TSMC's expertise in both high-performance and low-power chips makes it the only foundry capable of meeting this demand at scale. It's not just an AI stock, it's a smartphone, automotive, and IoT stock too. Even if AI growth slows, demand for semiconductors across industries keeps TSMC strong. This isn't a speculative bet, it's an investment in the infrastructure powering all modern technology. TSMC enables the entire digital ecosystem. That's why it's the smartest way to invest in the AI revolution. TSMC's dominance is clear in its financials, and the numbers speak volumes about its industry leadership. In Q3 2025, revenue jumped 30% year-over-year to $33 billion, a testament to relentless demand and TSMC's unmatched execution. The real story is in its advanced manufacturing. 5 years ago, only 8% of revenue came from cutting-edge processes. Now it's 60%, a dramatic transformation. Customers pay a premium for TSMC's best technology, funding the next breakthrough and fueling innovation. This financial strength lets TSMC invest tens of billions annually in new fabs and R&D, widening its lead over competitors. Its balance sheet is rock solid, and it returns capital to shareholders through dividends and buybacks. TSMC offers both growth and stability, rare in tech, and highly valued by investors. The numbers don't lie. This is durable, profitable growth that stands the test of time. TSMC's financials tell the story of a company built to last, and ready for the future. In investing, hype grabs headlines, but real wealth is built on reliability. TSMC is the quiet foundation beneath the tech world's flashiest innovations. Its business is about precision, scale, and execution, not hype. While software fortunes rise and fall, the need for advanced chips is constant. TSMC's stability makes it a safer bet than most high-flying tech stocks. It's a play on the persistence of technology itself, not just one trend. Every major shift, electric vehicles, 5G, IoT, needs more advanced semiconductors. TSMC sits at the center of all these trends, driving growth from every direction. Its diversification and resilience are unmatched. That's why TSMC is the smartest AI stock to buy now. It's the steel foundation of the digital age. Invest in the foundation, and you invest in the future. That's the surest path to long-term success. In semiconductors, nanometer means everything. The smaller the number, the more powerful and efficient the chip. TSMC leads the world in this race, with its 3-nanometer process in mass production and even smaller nodes on the horizon. Mastering this technology is a quantum leap. requiring atomic-level precision and decades of expertise. This deep technical moat is nearly impossible to replicate. That's why the world's top chip designers, like NVIDIA, depend on TSMC to stay ahead. TSMC's progress directly fuels its customer success. As TSMC advances, so do the products that define our digital lives. This partnership creates high switching costs and locks in long-term value. TSMC's relentless pursuit of manufacturing excellence is its engine. It's what transformed a quiet Taiwanese company into a global powerhouse. The future is built on the nanoscale, and TSMC is its master architect. For investors, this technological edge is a powerful moat. It ensures premium pricing, loyal customers, and lasting dominance. That's the power of advanced manufacturing. TSMC's location in Taiwan brings real geopolitical risk. Any disruption would have global consequences, making this a key concern for investors. Yet TSMC's importance acts as a silicon shield. The world's dependence on its chips deters conflict. The economic fallout from a disruption would be catastrophic for all sides. To reduce risk, TSMC is building advanced fabs in the US and Japan, diversifying its footprint. While most manufacturing remains in Taiwan, this move reassures customers and investors. Geopolitical risk is real, but it's also widely known and often priced in. TSM has reported its slowest revenue growth since early last year, with a 16.9% year-over-year increase in October. The company is planning price hikes of 8 to 10% for advanced nodes, which may impact major clients like Apple. The company's valuation metrics indicate a strong market position, with a PE ratio of 27.18x and an EV/EBITDA of 16.14x, suggesting investors are willing to pay a premium for its earnings. Growth metrics are impressive, with revenue growth at 24.27% and earnings growth at 26.99%, reflecting robust business expansion. Profitability remains high, highlighted by a gross margin of 56.29% and an operating margin of 45.81%, underscoring efficient operations and strong returns on invested capital. For long-term investors, this can mean opportunity. If you believe stability will prevail, TSMC offers a chance to own a world-class company at a reasonable price. The risk is real, but so is the potential reward. Building a strong portfolio is like constructing a skyscraper. You need both growth and a solid foundation. TSMC is rare. It's both a growth engine and a bedrock investment. It's plugged into the biggest tech trends, yet offers the stability of a dominant industry leader. For growth investors, TSMC is direct exposure to AI, 5G, and the future of computing. For value investors, it's a stable, dividend-paying market leader. TSMC's dual nature makes it a unique core holding. It balances risk and reward, offering both upside and resilience. You're not betting on a single product, you're betting on the ongoing march of digital progress. TSMC is the ultimate example of a quiet, indispensable company. It's the foundation on which a modern tech portfolio can be built. In investing, the most enduring returns often come from companies like TSMC. That's why it belongs at the core of your portfolio. Investing rewards patience, not chasing trends. The biggest gains go to those who spot great businesses and hold them for years. TSMC is built for the long term, with a vision that spans decades. Its investments in R&D and new fabs will pay off for years to come. The demand for TSMC's products is only going up as our world becomes more digital. There will be volatility, but the underlying trend is clear. Don't rush, do your research, understand the business, and see the long-term story. The real strength of TSMC is its fundamental, unshakable position in tech. The smartest investments are often the most obvious, hiding in plain sight. TSMC is the pick and shovel maker for the AI gold rush. It's the foundation for our technological future. For patient investors, it's one of the most compelling opportunities of our time. Take a closer look. The quiet giant might be exactly what your portfolio needs.